All right, we got it going on. We're getting there. A few people coming on in. This is like the episode that you don't want to do because, it's like your mom said, if you have nothing nice to say, don't say it at all. And here we are. Thank you so much for joining me. I'm Mitch Goldberg. It's 4:30, which means it's time for your post-market show. This is my live stream every Monday through Thursday. It's about helping you take control of your money. That's why I call it Be the Boss of Your Money. What an ugly day. Dow up over 500 points to finish down almost 500 points. So just about 1,000 point swing from top to bottom. Giving up the ghost, continuing from yesterday. There is just nothing good in this market today. It's a continuation of panic mode that we spoke about yesterday, continuation of a few things. We've got a good show for you. I'm going to break it down. I'm going to explain it to you. I don't want you making any hasty decisions. Believe me when I tell you, you don't have to do something right away. You don't have to react to every little gyration in the market or every big gyration in the market for that matter. Let's roll a quick intro. We're going to get into it. We've got a good show. Stick around. Thank you so much for joining me. We're just getting started. So if you're just joining me now, you haven't missed anything. But what I want you to do while I have you with me, if you have any questions, you know what to do. Hit me up in the comments. You have words of wisdom, words of encouragement. They are always appreciated as well. But if you have questions, definitely hit me up in the comments. I wouldn't be surprised if you have a lot of questions. What should you do? What to do next? Big questions are, should we sell everything and go to cash and get back in when times are better? Or is now a good time to invest? Is now like a really bad time to invest? These are all or none questions. And I think it's just when we're stressed, we're looking for quick solutions, questions we ask questions that just get one answer. Because it just maybe makes it less stressful, makes it easier for people. That's what I think. This was such an ugly day. How ugly was it? It was like the stock market fell out of the ugly tree and hit every branch on the way down. I can't believe I said that. Hold on a second. All right, listen, got to have a little fun in the live stream on a day like today. So first, just a couple of shout outs, particularly to Rhonda. Hey, Rhonda, how are you? So nice of you to join me. Thank you. Thank you. Thank you. Thank you so much. And good to have you. Thank you. It means a lot to me. You take the time. So it was an ugly day. And we spoke about this yesterday. So I know it could be wordy. So I'm going to just cut to the chase. I'll do my best. I'm already getting wordy. All right. Excuse me. A little stuffy. I have a little cold. What's going to happen is this. What's happening? Yesterday, the market really, in my opinion, turned into panic. It became a day of panic. That's why the market tanked yesterday. The more the day went on, the worse investors felt, the more they hit the sell button. And everything was down. I mean, I showed you my screen of all the stocks I follow. I'll do it again today. Yesterday, it was all red except for the bond funds. And Apple. Apple is like the one stock that went up considered as a flight to safety. Wasn't up today, but it was barely down. So let's not make a big fuss. But it's a really ugly day. It was an ugly day yesterday, and to me, here's what I said to you yesterday. I'm going to wrap this up by saying this. Yesterday, we had 92% of stocks on the NYSE down in one day. That is massive. And what I said is that is typically indicative of an oversold market getting ready for a bounce. But I also said, not yet. I don't think it's time. I think we're close, but I don't think it's time. And I was looking pretty wrong in the morning when the future shot up this morning, and then finally the Dow was up over 500 points. I'm like, well, maybe it was a viable bottom. We're still not far from the top, from the all-time highs of the major averages. It's whatever. I like I always say, I don't let giant market moves dictate my moves. Okay, I'm in control, not the market. I know what you're saying. You can't control the market, but I can control me. I can control my actions and how I react to things. And like I said, sometimes your best reaction is nothing. It's okay to do nothing. You don't have to react to every little thing in the market. Meaning, just because the market's up a lot or down a lot in a given day, the market could crash, the market could skyrocket. It doesn't mean you have to do something. Now, it's one thing to not do anything because you froze, because you're gripped with fear and you just can't make a move and you're frozen. That's not what I mean. I mean, when doing nothing is a conscientious decision, you look at your choices, what you could do, what you could change, and sometimes you'll just say, you know what? I like what I have. I like where things are from my personal situation. The stock market is an external event. It'll do what it does because this is how it's always been. I think we've gotten a little bit used to smooth up markets for the last year or so. And, we saw some hiccups in September this year. Then October rebounded, great month in October. And now, November was not good for the markets. And today's December 1st. So we're starting off this month on the wrong foot or on a bad foot, you could say. Okay. But what I said is I don't think it's a buyable moment yet because I don't think the panic is out of the way. And I was wrong for a few hours, but then I'm very right. Now, I'm not trying to give you this, oh, I'm right. Okay. The sooner you let go of, making being right important to you, the better off you're going to be. Just move on. So this is, okay, I see you out there, Philly. I'll put your comment up in a second. Okay. So this is more or less a continuation of yesterday. What I was saying is, it's not the flush out bottom. We're getting close, but I still see some more downside. Sure enough, that's what it was by the end of the day. It's a continuation of Powell and Yellen before the Senate Banking Committee yesterday and today. Powell said yesterday, hey, we're probably going to taper sooner or finish the taper sooner, which is tightening sooner. So that is a very big part. I think that's the main reason why the markets was down yesterday and continuing to go lower today. Now, we had our first diagnosed case of Omicron, the new COVID variant. That hurt for sure. But if the Dow was down 100 or 200 points, if the S&P was off maybe 0.5%, not a big deal. But I think a lot of people were expecting the Fed to not only not accelerate their tapering or pulling back on their monetary stimulus. I think people thought maybe the Fed would remain more accommodative, lower for longer, and that would be a boost to stocks. We didn't get it. And it was just like the timing is so bad for Powell to say, hey, we're going to accelerate the taper and get to rising interest rates a little sooner. I think it was extraordinarily tone deaf. But nevertheless, we do have much higher inflation than the Fed had been expecting. The inflation is sticking around longer than the Fed had anticipated. Shortages of all things labor and materials is sticking around longer than we thought. And that's where we are. Okay. So that's what today was. So today was a continuation, keep my notes here, was a continuation of yesterday. And when the Dow was up 500 points, what I want to, I guess the way I would put it is like this. When the Dow was up, 500 100 points and then gave it all back today after being up so much. That's what bear markets do to you. No, it's tough to say if we're truly in a bear market, although it seems like we could get into one pretty quickly. 10% from an all-time high in a major average is a correction. 20% is considered the technical definition of a bear market. Regardless, a persistently lower market, this is what it does. It breaks you. It breaks your heart. It investors are so accustomed to buying dips, but a bear market, and if this isn't a bear market, we'll call it a persistently bad market and a nasty readjustment. That's what they do. They pull you in and make you think everything's going right back up again, right back to new all-time highs, just so it could squash you and break your heart. And until people finally say, I'm done buying dips. I am done buying these dips. This is crazy. I can't do it anymore. It's too scary. That's when you know the downside has run its course. And right now, if I'm a betting man, it does not look like the downside has run its course. That is what's going on today. So it's part Powell, it's part Omicron, it's part travel restrictions, it's part worries that the travel and leisure industry, which has been a huge, huge jobs generator coming out of the pandemic, that could slow down and crush the jobs market. There are, airlines could lose business again. Hotels, you get the drift. The industrial economy was starting to perk up. Commercial real estate was starting to look a little better, but all of that is on hold. And could businesses afford another lockdown? Now, President Biden said we're not doing another lockdown. It's always easier to be brave. Oh boy, I hope you guys stuck around. I don't know what happened. Internet hiccup. Okay, so Philly, I'm going to start with you, and I hope I didn't lose you guys. By the way, Rob, good to see you. Damn, I hate when that happens. It's odd. Sometimes at around 4:40, 4:45, we get an interruption. Okay, so Philly is still here. Yes, thank you very much, buddy. You stuck with me, man. Thank you. All right, and let's go on a little bit more. Okay, I'm going to address some comments, but so we don't have another earnings season coming out until roughly the middle of January. So, we've got a little while for that to really get into something good. And in the meantime, the hottest stuff this year, All right. Thank you, Rhonda. We are back up. Thank you very much. We're seeing the hottest stocks of the year getting pummeled. And instead of getting into this year-end rally, which we were all hoping for and I was expecting, I've talked about it here before, but it looks like enough stocks are down that either people don't want to touch them or they're looking for tax losses now. And the worst thing is oh, I'm sorry, folks. These are the vagaries of going live over the internet. But the worst thing is that investors are now finding themselves in the position. I'm not saying mom and pop investors, us retail investors. I'm saying institutional investors are now in the position of having to decide: do I hold on to my winners while they're going down, or I just cut them loose and say, you know what? I had a good year. I'll sell everything. I'll go happy. I'll go on vacation for the next month and a half, next month, and next 30 days at least, and I'll finish the year strong. And even if the market goes up a little bit, I still had a good year. So why not just go to cash and I'll start all over, next month? Okay. So here we go. Let's take a look at a couple of comments. We've been in a bear market since February of this year. Other than 10 mega cap stocks, 97% of the market is down. I don't know if it's 97% of the market, but I have to agree with you. It's most stocks have been doing poorly. And it's, the averages are so swayed by the largest stocks because the averages are market cap weighted, meaning the bigger the company is, the more impact it has on the S&P 500, which is an index. And you can't invest directly into an index, but you could invest in a security that tracks or mimics an index. Okay. So the market's been has been holding up on Apple, Microsoft, Google. No, the stocks we talk about all the time, Nvidia. Okay, but you're starting to see them get picked off. Facebook has been kind of weak. Visa has been weak. You're starting to see one by one these stocks are starting to get knocked off their perch. Anyway, buying the dip doesn't work. Mid cap, small caps, travel all destroyed over a 2-year time span. Okay. Zero recovery. So I got dry powder for when the index finally decides to move in line with the price action. I know you hate this, but I will say it. Rigged market. I do hate it. I do. I don't think it's a rigged market, but Filippo, I am not trading your money. So you are entitled to see it the way you see it. No argument from me. Okay. I see more downside also. Yep. Higher inflation. Yeah, I think. Duh. We got a lot of comments here, man. My heart is broken. My biggest losses are in growth industries, but seen it before. We hold, we diamond hand. We hold, we diamond hand. You buy and hold. Diamond hand, guys, is slang in the meme world for diamond handing means you're going to hold on to a stock forever through thick and thin. Paper hands means you'll sell at the first sign of bad news. Okay. So Filippo, back up. Thank you. Rhonda, and is a Santa rally canceled this year? That is the big question. I mean, we've all been talking about this year in rally. Even on the homepage of CNBC this morning was, when the market went up, all of a sudden everybody's getting bullish and all the pundits were, oh yeah, this is a dip. This is a buyable dip. We've got this economy and that economy and semiconductors this and autos that and supply chain management this. Just the Santa Claus rally's big. That was just a dip. We're in good shape. I put my money where my mouth is. I didn't buy a thing. I didn't touch anything. I did not. I was tempted this morning to put in some buy orders, but I'm like, you know what? I'm not going to do it. I don't mind missing 500 or 1,000 points if the Dow pops up a little bit. Whatever. It's not that big of a deal anyway. I didn't buy a thing. I didn't touch anything today. So is the Santa rally canceled this year? That's a tough one. It's only December 1st with Omicron, tightening Fed. I don't think the market can overcome that. And I was out here saying like a month ago, hey, we're going to have this year in rally. Things are great. And it was pretty darn good from October to like mid-November. And here we are. And all of a sudden, like, it's just I don't know if the market could bear all these problems at the same time. And Salesforce.com stock got crushed, which is one of the stalwarts of the market. Boeing is under $200 a share. It keeps getting crushed. It's just heartbreaking. Um, so it's really tough to say. I'm thinking it's probably canceled this year because now we're at such a a big move down that it's actually would have to go up quite a bit in a very short amount of time to make up for it. We'll see. I could be wrong, but look, luckily I'm not betting my life on the binary decision of whether or not, and I know you aren't either, of whether or not we're having this, big rally in the next couple of weeks. Fake numbers by me, Mitch, just trying to make points. Thank you. No, oh, no worries. I get it. I get it. In 97% before. I totally get it. Let's take a look at how things did. Let's take it to the screens. Oh, let me put myself up here. Okay. So Dow down 461 points. Nasdaq down 283. That is a lot. Tech stocks, that's the worst, right, of the three major averages. Tech heavy Nasdaq down 1.83%. S&P off 1.18%. Gold was up a tiny bit, little flight to safety. Bonds were up, yields were down, so more of a flight to safety. Today, bonds traded at a crazy range from the 1.5s back to the 1.4s today. The VIX is over 31. Remember we talked about this number here, the VIX? So 20 is the line in the sand. It's over 31, up 14%. I mean, it would take a lot to see the VIX, get back down to well under 20 over the next, how many trading days are left this year? 20 trading days left this year, something like that. And like the last week of this year is nothing going on. I mean, it's Christmas week, holiday week. All right. So let's take a look at the Russell 2000 down 1.6. No, I'm sorry, down 2.34%. It's not surprising that the Russell 2000 is down the most. Okay, because that is small cap stocks, which are more domestic oriented. They get a greater portion of their revenues and earnings domestically as opposed to internationally. They have a tougher time borrowing. Russell 2000 is more of a sensitive index to vagaries of the economy. Okay, so I've got a couple of dates for you. So I want you to check this out. I put have a banner, not a banner, an overlay that I made for you guys. I want to share this with you real quick. Let's take a look at what the important dates are for the rest of the year. Okay, the important dates for the rest of the year. It's not letting me pop myself in here. Okay, but I'm still here. You can hear me. Okay, you can hear me. So important dates coming up. December 3rd. This is the first big date. December 3rd, on this Friday, we've got the non-farm payroll number and Treasury, the non-farm payroll numbers. Okay, that's the big labor figures. That is very important. The Fed takes a very close look at that. And if we just had some strong labor numbers, employment figures this week, so we expect the non-farm payroll number to be pretty strong. And that if it is very strong, that'll put the Fed more in a position of tapering faster than originally expected. Plus, on Friday, the Treasury hits the borrowing limit. Now, the Treasury said they could push it till the 15th of December, and then they really run out of money. But December 3rd is like the official first drop dead date that the budget limit, the debt limit has to be lifted. The next big date is December 10th. That's the next inflation figure, the CPI, the Consumer Price Index. So December 10th is pretty freaking huge to see what the inflation numbers look like. Has inflation continued to go up? Has it stabilized? Is it coming down? There is evidence by some companies, some company commentaries, that the supply chains have improved a little bit. Okay, so we'll see. And December 15th is the next FOMC meeting. It's actually a 2-day meeting, the 14th and 15th of December. But the 15th of December is around 2:15, 2:30 that day. On a Wednesday, they will announce their intention of whether or not, for sure, are they going to taper quicker, get to rising interest rates a little bit quicker, and that's a really important date. So those are the three really big dates that we have to pay attention to. Let's just take a quick look at crypto. Okay. Not a great day for crypto. Not a horrible day. I mean, yesterday was actually a pretty good day for most cryptos, but crypto is off barely. When I see cryptos off less than 1%, it's not even worth paying attention to. Ethereum got hit a little bit after being up yesterday. Uh, the Doge, I saw the Doge. I don't know why I follow that. It's really nothing to it, but 21 cents. So it just drifts a little bit lower. Seems every week or so it's drifting a little bit lower. I guess without the magic of Elon Musk getting everybody hyped up on Doge, it's really not going to go anywhere. And I feel like I can't stand it when a person of influence uses their pulpit to move something like a Dogecoin and touts it, and people who are not as sophisticated follow along and get burned. It just it bugs me. Okay, and let's take a look at the watch list. Sector ETFs. See, this is concerning, and this is part of the problem all day. Utilities were the leading sector all day. Utilities is a flight to safety. It's when people feel they're in a danger zone, they flock to utility stocks because they're pretty stable. They pay dividends, widow and orphan stocks. And what did poorly at the bottom of the heat? Um, Communications, discretionary, XLI. Communications, that includes like Facebook and Netflix. Okay. And you see the stocks that are down today. Technology did poorly. Industrials did poorly. Energy did poorly. Overall, there's not really a lot of good things to say about today. And the fact that utilities are up a little bit is not something good. I'd rather see utilities go down because it would probably mean everything else, uh, went up. Let's just take a look at some of the other stuff we should look at. How the EV stocks do? Yep, we talked about that. Very speculative, but Rivian down. Actually, it's about where it was a week ago, but Ride Lordstown Motor continues to drift lower. Tesla's off a little bit today, but it was up yesterday. Blink at 35. Yeah, nothing overly crazy from that group. What else do we want to look at before I let you go for the day? Let's take a look at the meme stocks. Meme stocks got rocked. Whoa, AMC down $5. Wasn't that just in the 40s, man? AMC gets AMC gets absolutely mauled. GameStop down 16. Bed Bath and Beyond. I hate when the screen blinks. Clover, $4 stock. Wendy's down to 20. Hood. Nothing good in the hood. Look at that, down $2, 23. Just keeps hitting new lows. I know it's a favorite stock of Kathy Woods, though. Kathy Woods loves that. She loves the platform. But I really think she's more of a momentum player. And I do have an issue when people are, when fund managers become more like superstars. To me, it's a sign of a top. All right, what do you got, Philly? Nexo, Ethereum, XL, and Bitcoin. Those are my faves on the list, on your list. I got you. Okay. We might have to do something for NFTs. Filippo was a guest on my show. It was a great show. He explained soup to nuts crypto and what's going on with it. And I think we're going to need to do that again. But I want to focus a little bit more on NFTs. It's such a popular topic. All right. So last thing we're going to take a look at. Okay. SPAC. This is the SPAC ETF, which was, let me get you out of my screen there. Okay. Down to 23. Actually, believe it or not, it's been around 23 for a while. It's holding up better than I would have expected it at this point. Let's just look at Penn National Gaming. 52-week low today on Penn. 47. Not surprised. I'm reading the worst things about the guy that touts it up. I won't say his name in the live stream. The Barstool Sports guy that does the One Bite Pizza reviews, but that guy's reputation is pretty much mud. And if you follow that guy on social media and people see that you follow that guy on social media, it's now a black mark against you. So be careful who you follow. Okay. Just word to the wise. Anyway, thank you very much for tuning in. I really appreciate it. Hopefully, we'll have better things to say. But for now, the downside continues. The market was great at pulling people back in, the buy the dip crowd, and then it just broke their heart, squashed them by the end of the day. And that's what persistently down markets do, is they break your heart until you finally give up on buying the dip. And that could persist for a pretty long time. So let's be careful out there. We don't have to make any hasty decisions. If you think of anything else you want to ask me, hit me up in the comments. I'll see those all night. And until tomorrow, thank you.